Welcome to Accepting Life, where we help you navigate the world of wealth and status. Bitcoin is a decentralized digital currency that has been gaining significant popularity and attention in recent years. It was introduced in 2009 by an unknown person or group using the name Satoshi Nakamoto. Bitcoin is often referred to as the world's most popular cryptocurrency, and it has made headlines in the news due to its fluctuating value, potential for investment, and its use in illegal activities such as money laundering and purchasing illicit goods. Despite the controversy surrounding Bitcoin, it has become a subject of interest for investors, financial experts, and even everyday individuals who are curious about the world of cryptocurrency. In this comprehensive guide, we will explore the concept of Bitcoin, how it works, its benefits and drawbacks, and the future of this digital currency. Bitcoin has been making headlines as a popular cryptocurrency that gained serious popularity, especially after a sudden increase in value. In fact, Bitcoin almost reached a value of $20,000, falling short at just $19,783. This rise in value made huge returns for those who had purchased the coin for less than $1,000 at the beginning of 2017, or even earlier. However, many of us were caught unaware of this opportunity, and for some, any cryptocurrency may have seemed like a poor investment, especially when it's described as a drug and gangster money. But for those who ignored this negative rhetoric and invested in Bitcoin, they may have made a good return. If you're unfamiliar with cryptocurrencies, they are basically digital or virtual currencies that use cryptography for security. One of the biggest advantages of cryptocurrencies is that they are extremely difficult to counterfeit and are not issued by any central authority, making it impossible for governments to regulate them. This is why they are so alluring, especially if you are concerned about the safety and security of your hard-earned money. So, how did Bitcoin and other cryptocurrencies come about? In the 90s, there were several attempts to create digital currencies, but they all failed due to third-party approaches. However, in 2009, an unknown person or group of people under the alias Satoshi Nakamoto introduced Bitcoin. Their launch featured a peer-to-peer electronic cash system that is decentralized and eliminates the need for a regulatory third party. As of September 2015, there were over 14.6 million bitcoins being traded at an estimated value of $3.4 billion. Thanks to the success of Bitcoin, it gave birth to other cryptocurrencies such as Ethereum, Ripple, Monero, and 1,400 others. Bitcoin uses a clever system called blockchain technology, which ensures that participants take part in the system to prevent double spending. The blockchain is basically a public ledger that keeps a record of all transactions happening within the network and making all the details available to every participant, making it impossible to falsify any spending. We will demystify Bitcoin and other cryptocurrencies, so you have a clear understanding of what they are, how they work, and what you need to know before you invest. We will explore the benefits and risks of investing in Bitcoin, as well as provide an overview of other popular cryptocurrencies and the technology behind them. Whether you're a beginner or an experienced investor, this comprehensive guide will equip you with the knowledge you need to make informed decisions when it comes to investing in cryptocurrencies. The ingenuity behind Bitcoin is the use of blockchain technology, which ensures that participants take part in the system to prevent double spending. Blockchain is a public ledger that keeps a record of all transactions happening within the network, making all the details available to everyone. Each transaction needs to be signed off by the sender using their private key, and then the transaction is broadcasted in the network. Once confirmed by a miner, the transaction is added to the network, and the system incorporates all the data without the need for a central authority. Cryptocurrencies make it easier for two parties to transfer funds between each other with the use of their public and private keys, making secure money transactions with anyone in the world. This eliminates the need for intermediaries like banks and avoids the high fees they charge for transfers. The use of blockchain technology has further prospects in online voting and crowdfunding, especially in elections. It can be used to verify the legitimacy of votes, reducing cases of miscount and irregularities, and creating a fair democratic process. The decentralized model of cryptocurrencies creates a virtual world with no boundaries, where one person from any country can trade with another without devaluation of their currency. Cryptocurrencies have certain shortcomings, such as their virtual nature and the absence of a centralized authority. A cryptocurrency balance can be wiped out if the backup is lost, and the lack of government control means that it is entirely possible for a whole economy to collapse. Bitcoin and other cryptocurrencies are innovative creations that have the potential to revolutionize the financial industry. Understanding the intricacies of how they work and their pros and cons is essential before investing in them. One of the key advantages of blockchain technology is its ability to prevent fraudulent spending of coins. This is achieved through a decentralized network of computers that all maintain a secure and encrypted ledger of transactions. Each transaction includes information on the sender, recipient, and the number of coins being traded. To ensure the validity of the transaction, the sender must sign off on it using their private key. Once the transaction has been signed, it is broadcast to the network and must be confirmed by a computer known as a miner. The miner uses cryptographic equations to confirm the transaction's validity before marking it as legitimate and adding it to the blockchain ledger. The system incorporates many rules to prevent fraudulent activity, making it a trustworthy and secure method of transferring funds. The use of blockchain technology has revolutionized the way we think about currency and financial transactions. Cryptocurrencies make it easier for two parties to transfer funds between each other securely, without the need for a third-party intermediary such as a bank. By using their public and private keys, individuals can make secure money transactions with anyone in the world, avoiding the high fees charged by banks. The ingenuity behind Bitcoin lies in its use of blockchain technology, which allows for the storage of an online ledger of all transactions that is free from hacking and available to all members of the Bitcoin network. This technology has further potential applications, including online voting and crowdfunding, especially in elections where it can be used to verify the legitimacy of votes and reduce cases of miscount and irregularities. The decentralized model of cryptocurrencies creates a virtual world without boundaries, where individuals from any country can trade with each other without devaluing their currency or being limited by third-party restrictions. However, despite its advantages, cryptocurrencies also have certain shortcomings. For example, since cryptocurrencies are virtual, a cryptocurrency balance can be lost if the backup is not maintained properly. Moreover, the absence of a centralized authority, such as a central bank or the Federal Reserve, means that it is entirely possible for an entire economy to collapse if there is a lack of regulation or oversight. Therefore, it is important to balance the potential benefits of cryptocurrencies with a sound regulatory framework to ensure their stability and longevity. Cryptocurrencies have revolutionized the way we think about money and its control. The decentralized nature of cryptocurrencies is one of the most significant features that make them so popular among users. However, despite their popularity, cryptocurrencies have some inherent flaws that limit their widespread adoption. One of the main concerns about cryptocurrencies is their susceptibility to large fluctuations in their market value. Cryptocurrencies are not regulated by any central authority or government, which means that their market value is entirely controlled by market forces. As a result, the market value of cryptocurrencies can fluctuate wildly in response to changes in supply and demand. Despite the high security algorithms used in blockchain technology, cryptocurrencies are still susceptible to hacking. In the relatively short time that Bitcoin has existed, it has experienced numerous hacking incidents, some of which were worth well over $1 million. This is a clear indication that the security of cryptocurrencies is not foolproof and that there is still room for improvement. Moreover, there is a question of whether cryptocurrencies are legal. Governments around the world are still expressing mistrust in this decentralized currency, which means that their adoption is slow. While some countries such as the United States and Canada have accepted cryptocurrencies as an alternative, others like Bolivia and Ecuador have completely banned them. The decentralization of the money market is a legitimate concern as it poses a threat to the stability of any economy. The absence of a centralized authority such as a central bank or Federal Reserve means that it is entirely possible for a country's economy to collapse in the event of a cryptocurrency crash. Despite these concerns, blockchain technology and digital currencies are changing the old rules and systems of doing business. The existence of a decentralized system of cash flow holds enormous prospects for the world, especially by eliminating third-party intermediaries, cutting red tape, and creating a more inclusive and open financial ecosystem. However, cryptocurrencies also provide money launderers with a platform to engage in business since their records are not traceable or subject to litigation. Therefore, governments need to establish regulations and guidelines to prevent these types of illegal activities. The use of cryptocurrencies has both positive and negative effects on the economy. While they offer tremendous potential for a more inclusive and open financial system, their decentralization is a cause for concern. Governments must find a way to regulate and guide the use of cryptocurrencies to ensure their legality and prevent their misuse. Blockchain technology has the potential to bring numerous benefits to society, including limiting fraud and increasing transparency in various industries. For example, with the establishment of trustworthy online voting using blockchain, there is potential to eliminate issues of voter fraud and miscounts in elections. Additionally, blockchain can be used in crowdfunding, where it can help ensure that funds are used appropriately and transparently. With all information available to the public, blockchain technology can increase accountability and trust in these areas. As the use of blockchain technology continues to grow, it is only a matter of time before the entire world has to face the reality of its potential benefits and challenges. The question remains as to whether we should embrace cryptocurrencies and blockchain technology, or take a more cautious approach. While some countries have banned cryptocurrencies entirely, others have accepted them as an alternative form of currency, imposing tax laws on cryptocurrency transactions. Despite the concerns surrounding cryptocurrencies and their susceptibility to fluctuations in market value and hacking, blockchain technology holds enormous potential for changing the way we do business. By eliminating third-party intermediaries and reducing red tape, blockchain technology creates a more inclusive and open ecosystem for everyone. If you found this information helpful, please leave a thumbs up and share your thoughts on cryptocurrencies and blockchain technology in the comments section below. With the continued development and implementation of this revolutionary technology, it will be fascinating to see how it shapes the future of our world. Bitcoin is a revolutionary digital currency that has transformed the way we think about money and financial transactions. It is a decentralized and secure cryptocurrency that uses blockchain technology to enable safe and transparent peer-to-peer transactions without the need for intermediaries like banks. While it has its limitations and challenges, its benefits include low transaction fees, faster and more efficient transfers, and accessibility to a global market. The popularity of Bitcoin has led to the emergence of many other cryptocurrencies, each with its own unique features and benefits. As blockchain technology continues to evolve and gain mainstream acceptance, the potential for its application in various industries like voting, supply chain management, and more is becoming more apparent. Understanding Bitcoin requires a basic knowledge of blockchain technology, encryption, and public key cryptography. With this comprehensive guide, you should now have a solid foundation on the workings and benefits of Bitcoin and be better equipped to navigate the world of cryptocurrencies. Whether you are an investor, a user, or simply curious about the future of money, Bitcoin is worth exploring further. We'll see you back here again. Thank you for watching this video Accepting Life. If you found it valuable, consider subscribing to our channel and joining our awesome community.